This is Justin Pulitzer. This is my midweek review supplemental for Wednesday, April 25th, 2018, although most of you will be seeing this on Thursday, the 26th. So, a lot of you are new to following me, haven't seen my videos before, so I wanted to do a little bit of analysis that I put out there complimentary for people to see, and if you enjoy this, you can subscribe to my channel or see the full version of the midweek review video in the link down below in the description. So Caterpillar, as we know, has been a very bullish stock. It's been in some consolidation and pullback. And yesterday on their conference call, the stock had been up, by the way. You can see it had been up quite a bit. And on the conference call, the management said that they've reached the high water mark in their earnings, which was code for peak earnings. And this has been something that the market has been concerned about for weeks coming into this earnings season, and this was sort of a confirmation of that. So technically, you can see the stock is up quite a bit, but technically, let me zoom in here. Check this out. The stock here had broken out at 152.14. That was this close here before this breakout. It was a bit of a tentative one, and you had these few days of pullback to the 50-day moving average, and then it went and then completely fell apart here, and you're back below the trend. So my thinking is this: is if you're short the stock, I think somewhere between today's high of 146.60 and 148.50, which is the 20-day moving average, is probably a decent stop. The best thing if you're short that could happen here is a few more days of consolidation, and then if you were to take out this low, it can continue lower. If you're looking for a bounce play and you're a long, you could probably buy it up over 146.60 for a quick play, maybe up to as much as the 50-day moving averages, is that basically that 152 level, 151.92. Now that here could be some resistance because that was this bounce point the day prior to the earnings, and it's also was basically a retest of the breakout. So this becomes often when you have a breakout, there's a move up, a retest of the breakout, and then it continues higher. This was a failed pattern. So I would think that there are a lot of people who are in here who, I guess, bought the dip, who are looking to get their bucks back. Now, I would say that Caterpillar is probably going to be a challenge stock until it can get himself back up over the 100-day moving average. You can see that was sort of where it was hanging out around, and that's where it came back into. At the very least, this 50-day moving average must be recaptured and maintained. I suspect that they're going to try and get this management back on television to talk about it. For me, I mean, I just think they kind of told the truth. That it's weird because they raised their earnings, their guidance, but then they made this high watermark comment. So, I think that put the street into a little bit of disarray here, and they're going to be concerned about Caterpillar going forward. You can see the last time this happened that they had sort of an up move, a bit of a failed double top, and there was a lot of continuation down. You could see there was a bit of a bounce play. This, granted, was below once it moved below the 10-day moving average here, which had been the average of consequence. Then this was had multiple days of pullback. So I'm mindful of that, and that 10-day actually is up just below that 50. So that area to me, if there was a rally, would be an interesting right or right out short, at least for a day trade. So that's Caterpillar. Boeing. There was some concern about this sort of being the same thing, and you could see that Boeing had a really big pullback yesterday. It stopped on this 100-day moving average. Today it was interesting. It had opened up strongly, then sold off. That's sort of been the theme of this earnings season post the Netflix move up. That and even that had a pullback, which we had been talking about, expecting that. These stocks have had these pops on earnings and haven't been able to sustain, and this was all over the place during the day. It opened up, it was down, then it was up again, then down, and now it closed on back up. So my thinking on this is pretty simple. we had a range low here, and this was the channel. I would not be thrilled with this long if this starts losing 335.30, and more importantly that today's the 20-day moving average of 332. I would think if you start taking out today's low, given after today, like yesterday, everyone who bought was not rewarded today. If everyone who bought is not rewarded, and you take out today's low, there could be some articulation lower back down to the 311s. And I had drawn in, a head and shoulders here, and we had talked about 299 being a potential price target. So if you start losing the earnings day low, and more importantly, this 100-day moving average, which has really been what's holding it, then I think you could get the rollover. Here, inside of this Tuesday range, I think is just going to be chop, and you've got to kind of wait for it to come out of it. But you could see you have equal highs here on the bodies, so if you wanted to take like a right or right out trade, I would say over today's high of 344.91 for a press back up here, I guess you'd be hoping for 360s, but the stop on that to me would be 339.35. Would the 50 MA, if you want to give it a little bit more room, I would not let that get back below today's body into this candle, because if it starts accepting into the candle, it gets more bearish. So that body, let me see, this comes into play around, let me blow it up a bit here, 338.16-ish. Lockheed Martin, this is obviously a big defense contractor, looking a little double top-ish. Had a big pullback right to the 200 MA, and this is a retest of a breakout. Now, this candle to me looks like a range low, a bit of a look below and fail, but we did close below the Tuesday range. So for me, the trade here, obviously, look where the 100 MA is. It's up near the high of day. If you got up over 337.15, I think there's a quick play at least to the 50 MA, which is 343.38, and potentially even a little bit further, maybe the 346s. That would be the top end of the range here, right? The consolidation range. I'm not even going with the this high end of range. I'm talking about this area here, this consolidation. But anything below this level here, this 50-day moving average to me is a little bit iffy on the bigger picture. So I would say if you're long currently and you're already existing into the trade, you've got to be a little bit cautious on anything here that starts accepting back below this interim trend, right? These lows here. So 325.79. Anything below that to me starts getting much more bearish, because that's below these lows and into the trend and accepting. And of course, anything below the 200 MA would be an addition. I mean, this could even come back down into like the 303 level. Maybe, eventually it could maybe even get to the channel low, which is much lower. You have a gap fill around 290, 293-ish is the, if it were to come down like tomorrow, which I'm not expecting, but you could rotate all the way down, basically, on a double top. The for the bears, you'd probably want to see a few days of light bounces and then take out the earnings day low of day for the full rollover. So that's a couple of setups there that I'm watching for in Lockheed. General Dynamic, also another defense contractor. Very odd pattern here. It's almost like a mini Head and Shoulders with like a short neck head. I'm just making these terms up as we go along. That's you could see you got this the left shoulder, the kind of the head. It's almost like a little checkers king crown, right? My thinking on that is this was the regression line coming into the number. You had a trend line break, a move up, and then this was a look above and fail, and this kind of came down in epic fashion, really, to the 200 MA, and we closed just up above the 100-day moving average. So I would say at the very least, you have to start accepting price back into this range, and you can see the 50-day moving average here was what was catching it before. I would say anything below that 50 to me, and this breakout point around the 221 is a little vulnerable. If you can come back up into there, like if you got above today's high of day, above 218. I think there is a day trade to kind of, excuse me, fill up that gap, but it's a really choppy pattern here. And I think that anything below this regression line to me is problematic. There's a big earnings play coming up tomorrow in UPS. Now, check this out. This was a failed Head and Shoulders that came up, and then this got Amazoned, right? There was a worry about Amazon doing their own delivery. So you have a very defined moving average confluence here of a 20 crossing through the 50. So this, to me, anything below this, you see we came up to the top of the range. I'm thinking this. You have a downtrend here. So if there's a gap up, you could have a gap and go that gets to the 111s and potentially even the downtrend up here around like the 115s. Look where the 38.2% fib retracement is from the peak to trough. Actually, I got to redraw that. Hold on. Excusez-moi. The low here was 101.45. Okay. So up to like the audible here, 114.47, I would think. And that's like the 200 and 100-day moving average confluence. Maybe it squeezes on a little further to the downtrend. So I'd be watching for some type of a gap up that takes out the downtrend line that fills up here to the 111s and then maybe a little still further. If you lose this these moving averages here, and I'll show you, we have a trend line here that we're sort of on the verge of snapping. I don't like how I drew that. I don't like how I rendered that. Let's get real fancy here with our terminology. I'm still not loving this. Sorry, we will get it right. It's just not snapping so well. You can see we're right a little bit below it. If that were to break, there's danger of filling up the triangle here to retest the low, right? So I think anything below this 50-20 MA confluence, which is like the 107.02 to 106.94, I think there is continuation a little bit lower down to the to retest the lows. We'd have to see if it can make a higher low. Maybe it wants to come into like the 103s, 104s, but a break of that, to me, I think there would be some continuation lower. I want to look at the last time this had a gap down, there was some continuation lower, so there probably would be a little bit of further press. So if you have a failure at the top, there could be a rotation at the low, considering you have the trend line break here. Hope you enjoyed these videos. If you want to see the full midweek video, the link is in the description below, and please be sure to subscribe to my video channel. That's Justin Pulitzer Trades, and the link to that is in the description below as well. Have a great rest of your trading week, and I'll see you for the weekend video. Cheers.